So, in the world of big tech, something really fascinating just happened. You have two giants, Meta and Microsoft, both pouring billions and billions of dollars into AI. But when they reported their earnings, Wall Street basically rewarded one and absolutely punished the other. So what on earth is going on here?
Just look at these numbers for a second. It is absolutely wild. Meta's value shoots up by $176 billion. At the same time, Microsoft's tanks, losing a staggering $357 billion. I mean, that's a swing of more than $500 billion between two companies that are supposedly chasing the exact same dream.
And that right there is the big mystery we're going to solve. Both of them are writing massive checks for AI. We're talking servers, talent, you name it. So why did investors pop the champagne for one and hit the panic button for the other? Let's dive in.
All right, first up, let's open the case file on Meta. Their story is all about one thing, showing Wall Street that their huge AI bet isn't some science fiction project for the future. It's already paying off right now.
And this, right here, is the absolute key to the whole thing. For a while now, investors have been kind of nervous about how much Meta is spending. But this time, Meta proved that all that AI tech is directly supercharging its main moneymaker, ads. They're using AI to get the right ads in front of the right people, which, keeps us scrolling and keeps advertisers happy.
And they had the receipts to prove it. A massive 24% jump in revenue from the year before. This wasn't just good news. It was a loud and clear signal that their AI strategy is working. It's delivering cold, hard cash to the bottom line. And that is exactly the kind of language Wall Street understands.
Mark Zuckerberg also did a masterful job of telling the story. He basically said, hey, our first AI models won't be perfect, but what's important is how fast we're improving. So the message was clear. We're already getting great results, and we're just getting started. It's all about momentum. So, because Meta could point to that incredible revenue growth, their next move didn't seem scary at all. When they announced they were going to spend even more money, investors didn't run for the hills. They actually cheered. It was like, okay, you guys have a winning formula, now go press the advantage.
And oh boy, are they pressing it. We're talking about a plan to spend up to $135 billion on stuff like data centers and servers. It's a huge, huge number. But because they'd already shown their AI strategy works, Wall Street saw it as a smart investment, not a crazy gamble.
Okay, now let's flip the coin and look at Microsoft. Because while Meta was having its moment in the sun, things over at Microsoft felt, well, a whole lot different. The questions there were all about the cost. And it all kind of started right here with their cloud business, Azure. Now look, 39% growth is amazing for most companies. But for investors, this number is a crucial signal for AI demand. And what they saw was a tiny slowdown, just 1%. But that was enough to put a little crack in their story of unstoppable AI dominance. So here's the problem. You've got that key growth number slowing down a bit, while at the exact same time their spending is exploding. It jumped 66% in a single quarter. So investors are looking at these two lines going in opposite directions, and yeah, they started to get pretty nervous. And this analyst from Morgan Stanley, he just came out and said what everyone was thinking. Paraphrasing a bit, but it was basically, wait a minute, you're spending money way faster than we thought, and the growth we were counting on is a little slower than we thought. That's the core of the anxiety right there. So, to boil it all down, here was Microsoft's big problem. Their overall sales were great. They beat what everyone expected. But that one critical detail, the slowing cloud growth, combined with that huge spending, just created this fog of uncertainty. They were basically asking Wall Street to trust them, to have patience, and to believe the AI payoff was coming eventually.
Okay, so let's bring it all together. It's time for the verdict, and when you put the two cases side by side, the mystery solves itself pretty quickly. It all comes down to two simple words: proof versus promise.
Meta showed up with proof. They said, look, our AI is already making our main business stronger, which made investors totally comfortable with them spending more. But Microsoft, they showed up with a promise. They said, trust us, the payoff is coming. But the numbers just didn't back it up with enough certainty for Wall Street, and investors just weren't in a patient mood.
And if you take away just one thing, let it be this. This wasn't about Wall Street suddenly hating big spending on AI. Not at all. They punished spending without clear, immediate results. It's like Meta showed them the money, while Microsoft just showed them the bill.
So what does this story really tell us about what's next? Well, it seems pretty clear that Wall Street now has a new kind of test for any company that's going all in on artificial intelligence. You could call it
an AI litmus test.
As this AI arms race just gets more and more intense, you can bet that every single tech company is going to be under this same microscope. The message from investors is crystal clear. It's not enough to tell us about your grand vision anymore. You have to show us how it's paying off today. So the real question is, who's next? Who is going to be the next tech giant to face Wall Street's prove it moment?